Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Wednesday. It's August 3rd. It's about 8:10 in the morning. Market's going to open up in about an hour and 20 minutes, give or take. Markets are actually pretty strong, a lot stronger than I expected, especially after the free fall we had yesterday. Markets do not like Pelosi traveling to China or Taiwan, excuse me. So let's talk about what we got in store for today. First of all, AMD had earnings last night. The numbers weren't bad. As I predicted, they were a little bit below expectations. And the stock is down this morning. And that's going to put some pressure on the overall SMH sector, or the chip sector, as I predicted. Because A, we never got to that 8.6 CPI level that we had, that hump. And I've been talking a lot about that hump. And as I said, the stock did not do so well on earnings. So I'm expecting tech, especially chip stocks, to falter just a little bit. Expect some weakness from technology. Now, in terms of the calendar, what we have for today, we've got the factory orders. We've got ISM Service Index, but the big reports come out tomorrow. We've got international trades in goods and services and jobless claims. That'll give us some idea on the bottleneck in terms of China and other countries between U.S. and global economy. That'll be kind of interesting. Also, in terms of earnings, let me show you what we got today. We've got ABC, and here's all the estimates that are supposed to come out. We got Align Travel, 92 cents. Allstate, Bookings, and I only gave you the big ones here. Borg-Warner, Cars, you got a lot of stocks coming out. So there's a lot of unforeseeability in the market. Generac is coming out. Robinhood is coming out. That'll be very interesting to see what their forward-looking statements are. MCK's coming out, industrial stock. E-commerce, South American company. MGM, it'll be very interesting if Chinese are gambling again. Marathon Oil, that's a big one that's coming out. Monster Beverage, man, I've been all over this stock last couple of weeks. New York Times, Novavax, controversial there. Cuervo, chip company for Apple, little ammunition here. Under Armour, it'll be very, very interesting. And Western Union, a lot of stuff. Now, tomorrow, you got Square coming out. That's the second biggest report of the week following AMD. And they're expecting negative 74 cents. Negative 17 cents, which is negative 74.2% year over year. I think they're going to do a little better than that. Revenue is pretty much in line, I believe. I don't think it's that wacky or that squirrely, but EPS, I think, can be a little bit better. Now, the big thing we need to pay attention to right now is volatility, and volatility looks like it's picking up. Now, the question is going to be, is volatility going to pick up and start rising again, or is it going to be just a little bit of a spike? Because I think the markets are getting ready to cool off just a bit. Matter of fact, if you look at the SPY, let me kind of give you some indications. It looks like it's notice that's the hump that we're talking about, and a lot of the stocks are having a really hard time getting over that 8.6 hump. The reason I'm focusing on this is when the government reported 8.6 CPI and the market just dropped to new lows. And ever since then, we've been going higher. But my theory is if we can go above this level and stay there, that'll be very, very significant. Now, interestingly, if you look at the bond market remains in that range. It remains range bound. And let me show you a better picture. See how it's in that channel, and as soon as it went above that channel, it started moving a little lower. So I believe what's going to happen is I believe bonds are going to stay in this channel, and I believe stocks are going to stay in this channel for the foreseeable future, probably up to about September, maybe October, and then we're going to start rising again. Now, we could make a new low, slight new low, but I think most of the bond market yield is priced in, and if you look at the QQQ, you'll notice that a lot of the stocks have been moving in the exact same direction. But I don't think we're ready to break out just yet. I think we're going to come back down and stay in this range. Let's talk a little bit about global economy, just to kind of give you an idea of what's going on. Global stock markets were mixed Wednesday as traders watched for potential economic impact from Nancy Pelosi. The eagle has landed. Speaker of the U.S. House Representative. I don't know what the hell she was doing there. Nobody invited her there. China, which claims self-ruled Taiwan as part of its territory, banned imports of Taiwanese citrus fruits and frozen fish. Ooh, frozen fish, citrus fruits, how dare they? But that's about as bad as it got. I think things are going to cool off of that. Hopefully, she'll leave sooner than later. Labor Department said American employers posted fewer job openings than expected in June following interest rate hikes to cool surging inflation. Fewer job openings is a good thing. It looks like people are working, which is good, and people are spending. Investors worry aggressive efforts by the Federal Reserve and other central banks to tame inflation that's running at a multi-decade high might derail global economic growth. It's a balancing act. The Labor Department said Tuesday that employers posted 10.7 million jobs in June, down from 11.3 previous month, but still relatively high figure. Job openings, which never exceeded 8 million in a month before last year, had topped 11 million every month from December through May before dipping in June. Hopefully that's the end and that we're going down at this point. Some weak data on the U.S. economy added suggestions that the peak in inflation has passed. That's my argument, but also indicate the risk of a recession is increasing. But I'm seeing a risk of a recession increasing down the road, not imminently. So that's very, very important because remember, the market can only ascertain and price in anything that's known within the next 6 to 9 months, 3 to 9 months, which is about 6 months. So if there is a recession 2 years down the road, it's not going to be priced into the market. But in terms of near-term data, there is a lot of evidence that inflation has peaked. And that's a very, very, very bullish sign. Now, I want to talk about sectors with you guys. As you could see here, no, we can't see anything just yet. As you could see here, cumulatively, you got energy, utilities, healthcare, consumer staples. Not much has changed. And again, I believe this is a pullback in energy, not a main driver. On a monthly basis, you still have tech and consumer discretionary driving this. I think they're going to cool off. I think this is a pullback. I don't think they're ready for prime time just yet. And as I showed you yesterday, consumer stocks already started coming off. I don't think stocks are ready to go past this hump because bonds don't look like they're ready to go past this hump. I think we're going to see a decline in tech stocks, in industrial stocks, in utilities a little bit. Anything that hasn't gone through this or anything that's near this level. But with that said, I think energies may come up a little bit. I think consumer staples will be able to hold on to this. And I think healthcare will be able to hold on to this. So right now, if I were you, I'd be focused on energy, consumer staples, and healthcare. I would be avoiding most other sectors. Matter of fact, you might have noticed we put on some short positions in some sectors. Now, as far as top stocks, that's right, today's Wednesday, top stock, bottom stock, I got a good one for you. We're not even going to cheat today. Top stock, I'm going to bypass Enphase and go to Occidental. Let me show you why. I love this choppiness with this ascending trend. It looks like we're going to go higher, not lower here. I like the fact that we're just going consolidating. I think we're getting ready to move higher. I wouldn't be surprised to see this move to the 70, maybe all-time highs, but I'm pretty sure we're going to hit 70 because I'm seeing energy stocks rocking and rolling again. And again, 65 compared to all-time high 73, not big pullback. So I like Devon Energy for the long side. For the short side, I would go with Lincoln National Corporation. It's a financial company. Let me show you this. Yeah, it's a life insurance company. And they really haven't been doing really well. 5-year return, negative 29%. 3-year return, negative 10%. So they're a pretty crappy company. And I believe financials have topped out. That's why I've been shorting some bank stocks like Wells Fargo. So I think this stock is going to revert back to its main trend. RSI is like a bit overdone. On a 5-day basis, the RSI is probably, if I had to guess, above 70. Let's take a look. Yep. Oh, and it's diverging too. Look at that. I love that. Nothing better than a little divergence on the way down, right? Higher prices, lower prices, and I think we're going to break down. Don't be surprised to see this go down to the 44 level. Now, folks, big news this week is going to be tomorrow. International trades and goods and services, jobless claims. I don't think it's going to be a huge one. Then we've got employment situation. All eyes right now. All eyes are on tech to see if we go back into this range, which I believe we will. And we're already seeing that in the bond market. Right here, we're seeing that come down. So I think bond market is going to come down probably to the 115-ish level, if I had to guess. But I believe that stocks are following the bond market, and I believe it's too much too fast for stocks, and we're going to revert back down to this middle range. Let me show you a few, like Amazon, for example. You will see they're taking on this exact same shape. See that? Too much too fast. I think we're going to revert back down. Look at XLY. Same thing. Looks like we're going to revert back down. Too much too fast. If bonds can't go higher, which means interest rates can't go lower, I don't think these stocks or these sectors are ready to go higher just yet. I think it's too much too fast. I like the optimism. I think this is great, and I'm very, very happy that volatility is no longer near the 35 level, but now near the 30 level. But I think we're going to see some downside in some stocks and some upside in defensive stock. A little bit of a reversal, kind of what we saw in February, in March, April of this year. Now, folks, remember, the best stock right now, Oxy. The worst stock, Lincoln. LNC is the worst stock. Ticker symbol LNC. Ticker symbol for Oxy is OXY. Now, before I let you go, folks, my new strategy might be my best one yet. It doesn't use fundamental analysis. It doesn't use technical indicators. But since I launched it May of this year, every trade has been a winner. And the average return on our option trades has been 17% with a hold time of just 3 days. Not bad, not bad. That's why I'm going live tomorrow, August 4th, 1 p.m. Eastern time, to give you access and a chance to get in what could be the next big winner. I'm dead serious, folks. When I saw that this could be life-changing for you, especially if you're not aware of the 5 patterns my testing shows actually work, you got to check this out. There's about 20 years of back-tested data that you will learn from. There's a lot of education here. And this can really be potentially life-changing. I need you to check it out. You got to check it out. Click the link below. Learn how you can make this strategy part of your trading toolbox. Can't wait to see you tomorrow, 1 p.m. Eastern time, Thursday, August 4th, 1 p.m. Eastern time. Don't miss out. Bye, guys. Love letters, comments, feedbacks. Want to hear from you. Bye.